let's jump in and talk about avoiding estate taxes here in Rhode Island through what you said, through the, putting it in another state's LLC. How exactly do they do that?
Yeah, so we talked earlier in the segment with regard to the Rhode Island estate tax and the fact that the Rhode Island exemption is one of the lowest in the United States at $1.8 million. And so if couples are above $3.6 million, they often come to me to ask, how do I avoid the 10% tax to the state of Rhode Island on the estate tax if I'm above $3.6 million? And as you and I, we share a ton of clients that are snowbirds, quote unquote. It seems like state law that once you hit your late 60s, you have to get a winter home in Florida somewhere, right? So essentially, we have a lot of clients who are going back and forth. They're in Fort Myers or they're in St. Pete for the winter, and then they're coming to Rhode Island for this beautiful weather that we have typically May through October. What we're counseling a lot of clients is that if you are truly a Florida resident, i.e., you have a Florida driver's license, you registered to vote there, you have mail going there, you see Florida physicians, that if you can qualify as a Florida resident, the Rhode Island Division of Taxation takes the position that if you're not in Rhode Island for more than 180 days out of the year, that you are not a Rhode Island resident. And so if you are not in Rhode Island for more than 180 days out of the year, and you are a Florida resident and you own Rhode Island real estate, a Rhode Island summer home and a Florida winter home, we can set up a multi-member Florida LLC, meaning husband and wife or a marital couple can be the 50-50 members of a limited liability company. LLCs have been around for many years. They are a little bit different than a corporation. They're not statutory, but they are a limited liability company, an entity that can be easily formed in Florida under sunbiz.org, and the Secretary of State there will form it, and that LLC now can be owned either by the couple and or their revocable trust that we spoke about earlier for probate avoidance, both in Rhode Island and in Florida, which is very important. From there, the LLC being owned by your revocable trust would own your Rhode Island real estate. There is a tax memo from the Rhode Island Division of Taxation that's been out since the 90s that enunciates that if an entity owns real estate in Rhode Island rather than an individual, that essentially the entity is not subject or does not have to pay estate tax, meaning there's no estate tax lien release that needs to be obtained in order to clear the lien on the real estate when people pass away to ensure payment of the Rhode Island estate tax. So by setting up a Florida LLC that owns your Rhode Island vacation home or summer home, you can essentially remove your Rhode Island property from the calculation of estate tax. The other issue that we see quite often, a lot of people are under the misnomer that if their estate in Florida is $2 or $3 million and their home here in Rhode Island is only worth $1 million, that essentially because they're under the $1.8 million exemption, that they're not subject to Rhode Island estate tax. And that's unfortunately not the case. An Arizona tax court opinion came out years ago that said, even if you are a Rhode Island where most of the assets are in Florida and only a quarter, under my example, of the assets are in Rhode Island, you can actually make your computation of estate tax based on the estate wherever located. So under this example, the state of Rhode Island could tax, they look at $4 million, then they deduct the 1.8 so that you have $3.2 million in overage subject to a $320,000 Rhode Island estate tax, and then you multiply that by 25% to get the amount of tax that you owe Rhode Island. So just because your Rhode Island asset is below $1.8 million doesn't necessarily mean you won't owe Rhode Island any estate tax. Wow. So with that being said, for a lot of clients these days, we're popping their Rhode Island real estate into a Florida LLC to essentially remove it from the reach of the Division of Taxation for state estate tax purposes.